Well, hi there. This is David Friedman with my co host Dave Berkus on TCA Crossroads, where entrepreneurs and investors connect and learn things. And I think today's going to be interesting and a good learning experience for both the investor as well, mostly of the entrepreneur. How are you doing today, Dave?
I'm doing great. It's summertime, and that's good for all of us. I swim a lot, so it makes me happier. The weather is warmer in California. It's very hot in the east, and so we're actually doing pretty well here. And I'm happy to be with you. And you've got a subject to tee up right now that I think everybody will want to hear.
Yeah, well, I was thinking when you were talking about it's summertime, the first thing that popped into my head was a song, Summertime, Summertime by the Jamies. I used to do doo-wop on the streets of New York,
Do
and I'm
up.
not going to do it today, though. But that's what
Please
it
don't.
reminded me of. No, I don't want to
Okay.
scare away the visitors we have. But I do have a concern that I wanted to talk about. I don't have any presentation slides, but I think it would be an interesting dialogue. I have a client. I have several clients, but one client I try to advise, don't put in a request for funding. Don't put an application to TCA or anyone else until you do certain things to ensure credibility, to ensure you have your team, to ensure you have your competitive matrix out there, to ensure your technology is set perfectly, to ensure you have documentation, to ensure all the components that are necessary are laid out correctly. But he didn't listen, and he put an application in, which of course bounced to me, since it was it was my client. They said, "I got a problem. Do you think this is ready for prime time?" And I looked at it, and I you know, reached for my digel, took a couple of those things, and then said, probably not, but I'm going to go run it through our AI system, TCA Investment Readiness Report, just to correlate it. And I had an idea what it would come out to be, and it came out not great. But the information hopefully will go back to this client, and then he or she, I won't say which one, will do a better job going to the future, but it explains what you need to do. So I wanted to open it up for a discussion. What do entrepreneurs need to do to make sure they have the highest probability of getting funding? Now, other than listening to our TCA Crossroads, which provides a lot of good information.
Okay, so I'd like to kind of answer that and let you answer it yourself because you're obviously deeply involved in this. But an entrepreneur that has great ideals and wants to have a very large company and takes a very large salary from a limited amount of money that has been raised kind of scares us. Entrepreneur that isn't ready with a product market fit, no matter what, even if they've just interviewed potential customers or if they put together any kind of a prototype, is one that we will listen to much more than one that just has slides and an idea. And so I'll answer that question by saying preparation is everything. And there are so many ways in which somebody can prepare. Number one, if you're a lone entrepreneur, you're not going to get funded. You need something of a team. Even if some of these people say, I will come aboard after funding, it still is a team. And we can evaluate that team. Number two is if they have had any kind of product market interplay, if they've tried to do anything with the marketplace to validate what they're doing, I would be much more logically inclined. Number three, if they have any kind of context, if they know they're in the right place at the right time, because the market is rising. AI was a good example 2 years ago. Then we'll listen to them because we know that a rising market is one where we can make more money. And number four, if they have any kind of relationships with people that will help them get there faster, it's a very much more important thing. So the fifth thing is the money itself. Have they found a way that they're going to raise friends and family money before they come to us? And if they haven't, why are they coming to us first when there hasn't been any attempt to fund their company with any kind of money from friends and family? Those are the five.
Yeah, so I'm not sure where to really start. Maybe at the beginning with self-funding. I think that's where a lot of people start off. And I've heard, and I'm sure you have too, I've spent $40,000 in cash to develop the software package, but what I'm looking for is a valuation of $10 million based upon this Excel spreadsheet that I developed because it's 1% of the population. I'm sure I'll get there. So that that's sort of a red flag right off the bat. The last thing I want to hear is if I can only get 1%, because that just triggers me to say, I got all the emails of all these Chinese people and the Indian people. I'm going to send an email to each one, see if I can get a half a dollar. And I
There you
could
are.
be a millionaire. Doesn't work that way, obviously. But they have to be realistic. Let me start off. If I'm putting in this amount of money and time, the valuation is related to credible evidence that this will grow, either LOIs, revenue, other investment by other angel groups or investment groups that have better knowledge, maybe. And there should be some relative multiple that makes sense when you're looking at valuation, notwithstanding how much you're asking. So I always thought it was kind of interesting to start off with the end in mind. If they're looking for that, I like to find out how they're going to get to that point. Your thoughts?
Very good. First of all, you jumped into valuation when I wasn't speaking about valuation yet, but certainly that's the very next step. And it is something that if those 5 things that I mentioned aren't in place, the valuation has to be much lower. And if they are, you're entitled to ask for more because you've already proved something of product market fit. You've proved that you're willing to put your own money into the company. You've proved that you have the relationships and context and the things we talked about. So there is a scale that I think you could probably draw. It's probably pretty linear, is how many of those things has the entrepreneur really addressed before coming for funding? Your entrepreneur didn't, and in fact was spanked. And then you have to ask, if that entrepreneur does everything in the next 12 months and comes back again, is that entrepreneur going to have an equal chance to be funded as before, or a lesser chance because we've seen the company once and we saw the entrepreneur too early?
Yeah, in this case, I decided to short circuit it because we knew it was, he put down I was the advisor. So it came to me. So it never really got into the system. So it's not going to be prejudicial. But let me go back to the friends and family. I've advised people before. I mean, not only my clients, but others to do 2 things. Number one, craft a really strong elevator pitch so we know context. I'm a big fan of elevator pitches. As you know, we did the perfect pitch presentation.
Yes.
What do you do? What market segments are you going after? What's the underlying technology? What are the benefits? And why is it different than what's out there today? Because I think that's really key. If a person cannot explain in 30 to 45 seconds, and this is true mostly of the engineers who seemingly want to get into the nits and gnats of the technology, you won't really get any traction because the entrepreneur may know more than we do as investors, but we want to understand it. So like a 4th grader would understand what you're really talking about. So start off with the elevator pitch. But the other thing is, let's go back to the funding cycle. So the funding is self-funding friends and family. What I've recommended, and then I'm going to ask your advice on this, is don't get people together and say, hey, I'm looking for money for my new startup. I want to set up a time when you can all come over. We can have drinks. We can have some hors d'oeuvres, maybe even dinner. But the real goal is for me to get funding for you. Rather, what I have suggested is that you say, I have a really interesting project and I want my friends and family to share in this excitement and give me advice and counsel on this product, this company. And if you know of anyone that might be interested, it's a much softer sell. It's like when you go on a job interview, you don't want to say, hey, here I am, because it really is a job interview. Thoughts?
Well, first of all, when people get their friends and family together, the biggest problem almost always is an attempt to overvalue the business because people are investing in you, not in your business and your idea. They will follow you, and that's a very good thing. But the worst thing you can do is to say, all right, so we're going to invest at a cap, if it's a note or if it's a safe, of 10 million, even though it's just at the idea stage. Because the professional investors, including angels, who come in later are going to reduce that valuation if there hasn't been much progress in the meantime. And that's going to make all of your friends and family unhappy with you when there was no reason to do that. Be sure that the valuation early on matches where you are early on and doesn't take advantage of these people who are investing in you and not necessarily in the company.
It's interesting because many people say, "Well, I don't want to give away too much of the business. I really have to be careful about my equity. I'm concerned about where it is." They're losing the fundamental truth of the long run, the art of the long run. They have to look at how to build this business, and the funding is only a part way to get there. It's necessary, not sufficient.
Right.
And I think they spend too much time on the actual funding, the percentage equity, rather than coming up with something that builds a partnership with the early investors, because those early investors will invest again. So you want to establish this trust and relationship versus have an adversarial point of view because your valuation is too high and they become intransigent. You don't want to, I don't think you want to do that. I think you want to build a good, does this make sense for both of us kind of perspective.
I agree. I have nothing more to say about that because that
Right.
is the truth. So
Yeah.
let's ask another question, maybe.
Go ahead.
What do the angels really want, David?
Boy, how much time do we have? We want to be able to participate in the growth of the company. We want governance and a board seat for those things that we really believe are going to be a good investment. We've seen the data from John Harbison's data, the ACA data, that when you have, I think I'm preaching to the choir right now, so it's kind of, I'm
Yes.
starting to laugh. So when you don't have a board seat, you get, for example, a 1x return. When you have a board seat, you have a 14 times greater return on your investment because you're participating. So the entrepreneur needs to build a relationship with these investors, put them on the board of directors, board of observers, and take their counsel. How many times have you seen, either in the presentations or when you're on the board, that the entrepreneur says, I know better than you. I think I'm going to go my way. Now, it doesn't mean that we're always right, but don't dismiss it right off the bat. Your thoughts?
Couple of thoughts on that one. Number one, I would answer the question I asked: flexibility, coachability. I walk when I can sense that the entrepreneur isn't coachable, because I've had some really bad experiences over 32 years of investing in young, fragile companies with entrepreneurs that may believe in themselves so much that they know so much more than those people who've been at it and done it before. And number two, I would think that the average entrepreneur wants to get into the weeds because they believe they know so much, as you just said, that they can explain as features much better than benefits. And we, as you said it in a different way a while ago, really want to hear the benefits. And so I coach the entrepreneur to do it in one sentence, which they almost never can do until you finally get it down to the crux. Tell me in one sentence, even if you compare yourself with FedEx or somebody else, so I get an idea of what you think you are. And
Yeah.
when they finally get there, then suddenly they see that it is the message that wins over the investors as much as it is all those things that we check off on the box.
Yeah. So two comments. Do you remember? I'm sure you do, because you and I are, like pretty contemporary. Beta versus VHS, and which one technically was better and which one actually won?
Heck yes. I was
Yeah.
all a beta fan. I had invested a lot of money in buying beta.
The point is, technology is necessary, potentially not sufficient. So let's go back down to a second point that you raised, and you asked what angels want. I want customer validation. I want to see that product market fit.
Yes.
Because when we look at things, and we've talked about this before, leadership, the operational team, the advisory teams are really critical. That's the number one aspect, or number one criteria that we look at to make an investment. The second is product market fit. And it gets into, how do you ensure that you know what your customer wants? It goes back down to two things. Number one, the elevator pitch. What's the real, who's the target market, the underlying technology to support, and what's the benefits? That's what we just talked about. But the other one is the validation in the market with the customer group. So I need to find out precisely who is the target customer, and have you done any research on the target customer? and I'll go through another analysis a little in a few minutes.
Hmm.
But knowing who that customer is, the drivers, both technical, well, not both, but technical, financial, behavioral, are going to be the keys to success. And they have to understand that either by primary research or secondary research. And they can do it by saying, look, I developed this product for this customer. And there's a lot of customers that look like them. So I can do an inductive process in development versus I have this great technology and I know it's applicable for a variety of things. That's a deductive approach. I don't care which one they use, but you have to go touch the customer and validate whether or not this is something that the customer wants, because it's either transformational or it's a better mousetrap, and they have two different implications for the angel, right?
Okay, so let's summarize where we are, and then I'll ask you another question.
Okay.
Summarizing, we think that first of all, there needs to be product market fit that is proven some way or another. Number two is we need to see entrepreneurs that are flexible and coachable. Number
Right.
three is they need to be realistic. Number four is they need to talk about benefits so we understand it, not just features. So let me
Right.
ask you then, now that we've gotten that far, why do angels say no?
Focus, focus, focus. So they're defocused. Number one. Number two, they're not spending money correctly. They're using it for their own internal salaries. They're not using it for growth. Number three, they haven't done any market research. It's like, trust me, if I can only get 1%, it sounds such a small number, we should be able to do it. But I want to touch on something where I think there is a lot of data that is not used correctly, and that is competition. When
Ah,
people look at their business, they say, no one is doing it the same way we are, or no one is doing it this way. So they basically diss the competition, which is both direct and indirect, as well as potential competitors. Learn who the competition is, learn the potential competitors, and ask your customers, who else would you buy from?
mhm.
If you're trying to solve this problem, how would you solve it? Are you going to use an abacus? Are you going to use a supercomputer? Or are you going to use a back of the envelope calculation? Because that tells me whether or not there's value or not. Is this disruptive or is it a better mousetrap? So those things, not understanding the competition and putting it in the context of the customer, I think creates a problem of why I'd be leery about investing in a company. I need to
Okay,
understand the context and the competitive market.
so let me hit another one for you. We as angels have been burned so many times by the shiny object that we have invested because the idea sounded so good, especially when we talk about medtech. I'll cure the world of cancer. And we fall for it. We fell for it for years, but then it's turned out to be something very difficult for us. So I think number one, too early is the reason why I will no longer invest. It's not that I'll invest in an idea like I would have in the year 2000. Oh, the year 1999. If the idea had a .com in the word, I invested and I lost a lot of money. So too early is the biggest one. Unrealistic valuation. I don't want to have an investment where we're going to disappoint our fellow investors with whoever comes next and does a down round. Ain't no way that I want to put my name, let alone our group's name, on an investment that is overpriced. Dave?
Yeah, so we in TCA, at least in the Orange County network, we've come up with a better investment strategy. And I think and I don't think the entrepreneurs understand that most angel groups, most investors do either written down or not, or verbally have an investment thesis. What we have today is what we call a barbell strategy. We're looking for shorter term returns, 2 to 4 years, and the longer term, high risk, high reward. That could be the medtech one. A new molecule can result in billions of dollars, of revenue. So the angel or the early stage investor now will look at a business in the context of where it fits into this barbell portfolio approach that we're working on. The second thing is that many angel and early stage investor groups have funds, and many not only have funds, but invest individually. So I do, as you know, I was fund first, and then I complement or supplement that fund investment by investing in deals that are more high risk, high potential returns, and somewhat of a barbell strategy. I think the entrepreneur needs to understand who they're selling to and what their investment strategy is, because if it doesn't fit the investment thesis, we will not invest. I mean, some of us don't want to invest anymore in medical device. I happen to like it, but as I get older, I'm now saying, well, where's my IRR? The good news is
Yes.
from some of the funds that I've invested in through you and through TCA and New Fund, I've been able to get a nice check in March and April this year, both. So I felt pretty good about that. You know, last year was a different story. But the entrepreneur has to understand the investment thesis of each of the groups. They need to do the homework because, in a sense, the early stage investors are buyers. Understand your buyer, understand your customer, then you can tell your story correctly. And I don't think a lot of them understand that. They just, I have my deal, this is what I want, put it into the application process and pray. So spray and pray doesn't work.
Spray
Be
and
very
pray.
precise.
That's good. Okay, so this leads us to the final thing we can talk about today before we run out of time. And that
Okay.
is, if you'll give us your thoughts about the capital roadmap. When do the angels invest? And what are the things or stages that happen before that?
Most of the early stage investors and angels will invest in pre-seed, seed, early A, and TCA Venture Group will now go beyond A and B because it fits into the barbell strategy. Higher IRR, lower potential MOIC or multiple on invested capital. We will invest early on if there's really a transformational technology, and especially where we have the expertise to be on the board or board of advisors to help with that implementation. We will not invest on back of the envelope. We will not invest with a solopreneur. The most important thing, do I have a good operational team supported by a good advisory and board of directors? Do I see the customer? Do I understand the focus that the entrepreneur has on that customer? And that usually gets into the MVP is being implemented, the pilots are being done. I have maybe some LOIs. So there has to be credible evidence that in a sense, the dogs will eat the dog food. The people will buy what you want. So I'm less concerned about if it's pre-seed, seed, growth than the reality of where you are on the customer journey and what's credible and what you have that's visible so I can literally touch it. And then finally, my point of view is I want to invest more on transformational technologies because I get a higher return, especially if I'm going after the longer term investment versus a better mousetrap, which may fit into my barbell strategy. It goes back down. The entrepreneur has to understand where they fit in, and not everything coming to us is transformational. We see a lot of line extensions, a better mousetrap. So that's the way I look at things. Your
Okay.
thoughts on it?
Oh, well, I'm not going to give you any more on that because I happen to believe what you're saying is the right thing to say. So I'm going to help close today with
Good.
2 questions to you, kind of a lightning round if I can.
Uh-oh.
What makes you lean forward and listen and be really intent to want to see what's happening in that first minute or 2 of a presentation?
Yeah, that one's the easy one because I've been on this high horse about the elevator pitch. In 45 seconds, you'll either grab my attention, it'll make sense to me.
Right.
It's something that I know something about. I'll know, I can see the customer, I can see the analog, I can get the context, I can feel comfortable that at least I understand it. And the question in my mind is, do I want to hear more? If the answer is yes, you got me. Then the rest of the presentation or the story confirms or denies that which I heard. So that's an easy answer to me.
I will echo that opinion, David. All right. So the last thing to ask is what makes you tune out right away in that first minute or 2?
Oh, that's also easy. we don't have any competitors in this business, and if I get 1% of the market that I'm telling you we will get, we will be $1 billion valuation in 3 years, and that's why I'm only looking for a 40 million valuation right now. Don't be concerned that I don't have any revenue. We're pre-revenue, but look at the spreadsheet and how good it is. I'm gone. I just can't do it because I've been on the other side, and I can make a spreadsheet lie. I don't want to do that and be on the bad side. I've invested in too many things that have not turned out well, and I just want to try to minimize my risk. It's an issue for the investor, in my mind, minimizing the risk as well as maximizing the return.
I'm with you on that. So that's all we have to say for today, but we could have gone much deeper. And I'll give you the last word, David, but what we have said today should really be internalized by entrepreneurs looking for money.
Yeah, this was a different type of an episode. It was just you and I talking, but these are things that are really concerning to us as investors, and they should be concerning to the entrepreneurs. I mean, I take the experience, relay it back through my consulting with companies or through the small business development centers, and I encourage the entrepreneur to use those resources. The small business development centers, participate in pitch contests, get input, meet the investors because you'll get some ideas. Practice your elevator pitch. Make sure it's crisp. Make sure they understand the context, or to your point, give the analogy. So I'm hoping and I trust that this discussion will be useful for the entrepreneur and also useful to some of the investors, especially the early on, the new investors, on how they will look at a company. So with that in mind, David, I wish everybody good investing. I wish the entrepreneurs success, and I look forward to seeing them on the cover of Forbes magazine. And for Dave Berkus and myself, happy hunting. This signing off for TCA Crossroads.